Eric Muathe, Muathe.com for the weekend of July 23rd and July 24th, 2016. Let's take a look at markets here with about 1 hour to go. Pretty much called up to the upside. SPX and the Nasdaq shooting for all-time highs, I believe, on a daily closing basis. Let's take a look at those charts. Let's begin here with the monthly chart for the S&P 500. I think the key for this market is whether the monthly chart continues breaking out. So right now we have what looks like a very powerful breakout. The market here is holding above the previous all-time monthly closing high. The level we've been watching here is the same old level, 2107.39. As long as the SPX is holding above this level, this market could easily push higher in the coming months. This is similar to the Dow also breaking out on its monthly chart. And for the Dow, the level to watch is this previous 2015 monthly closing high there, when the Dow closed at 18,132.70. So which is this monthly close right here, I believe February 2015. So as long as the market is breaking out on a monthly chart, you always have to be very sensitive to the idea that the market breaks out and doesn't look back. In fact, if you go to the daily chart for the SPX, ever since it moved above that 2107 level, so let's draw it somewhere about there. So this being the line that corresponds to the previous all-time monthly closing high. The key here is take a look at this breakout, and the market followed through. I believe 1, 2, 3, 4, 5 straight days closing above the previous monthly closing high of 107.39. So this 5-day follow through might actually be suggesting that over time this market has an intention of seeing much higher prices in the coming months. In other words, because of the quality of the breakout, where the market moved above that monthly closing high and recorded 5 straight days higher, suggests that the intention here is that the market could see higher prices. In fact, the quality of that breakout on the SPX, so go back to the SPX daily chart. So this breakout here, where the market has followed through for 5 straight days, reminds me of the action of the Nasdaq, let's call it in November of 1999. So go back to the Nasdaq 1 year daily 1999, and you can see that there was a breakout here to all-time highs by the Nasdaq, and this breakout led to a 7-day follow-through here. And because of this 7-day follow-through, we can see that the market went on a major accelerated run into March of 2000. So again, sometimes that follow-through might be suggestive of the market's intent in the coming months. So, and again, this is the Nasdaq daily chart here in 2000, from mid-99 to mid-2000, and here highlighting the quality of the breakout, where the market broke out, never looked back, and recorded 7 straight days of positive closes back to back once it moved to these new highs here. So we see the SPX doing the same thing in the current market. So the question is, does this mean that the market might conceivably be poised to go higher in the coming months? Now, of course, if the SPX fails to hold this breakout, so let's just also keep that in mind. So let's say if the market fails to hold this breakout in the coming weeks, then a failure to hold above that breakout is when we might start looking to go short. For right now, it's a scary market to try and find entry levels on the short side, because a breakout market could actually see much higher prices before it takes any major pause. If you take a look at the weekly charts that I follow here, we can see that for now the Nasdaq is holding above the previous resistance levels. As you can see that the top side RSI resistance has been breached to the upside on the Nasdaq, which is good. And also the line that was a level that has been a problem for many months. So this break on the weekly RSI here, this break in mid 2015, has been a problem since then, because the market's been finding it difficult to hold above that red line. As you can see, resistance on these levels here led to these highs, resistance here, double top to these highs here, and recently resistance here to this short-term top. Right now we are above the red line and the blue line. As long as that's the case, this market could see higher prices. And this is also true for the S&P 500. As you can see here, the previous break level that has been a problem since 2015. This line here has been a problem for the market. Market being unable to move above this line has led to major short-term highs in the market, and even recently here, which is this high before this market pull back here. So right now we are above that line and also above the previous RSI topside resistance lines. So you can see that week to week, this market now has free reign, if it wants to choose to do so, to move higher, because it has now moved above the resistance levels that has been a problem short term. Now that's the bullish argument for the market. Let me share with you levels that could be a problem. And you can see that one of the problem aspects of the current market is that on the daily chart for the Nasdaq, even as the market is making an improvement in price highs, you can see that there's a line of resistance that we really haven't moved above. So this could be a negative divergence setup for the market that eventually leads to a pullback. So you can see here negative divergence in that the market is making an improvement in price, but the RSI has not yet moved above this line of resistance. That's one layer. And also on the Nasdaq, we are coming back to test the recent break on the RSI. The RSI trend break here in late May, early April, led to these highs here. So we've been drawing a line from there. Should be something like that. Every time we hit this red line, the market stalls. For the highs there, we stalled here for these highs, and now we are coming back to test that line. So on the daily for the Nasdaq, you combine those two lines and the fact that the market is making an improvement in highs, price highs, but the RSI is not following through. So these two lines, the red and the blue, do suggest that day to day, it might make sense if the market confirms resistance here, that the next swing trade for the market is for the market to pull back. We can also see similar type analysis for the S&P 500. Here we see an improvement in price highs, but the RSI has been making lower highs. So this negative divergence setup here on the daily for the SPX could lead to a day-to-day pullback. And also if we take a look at the Dow Transports on its weekly chart, the Dow Transports right now coming back to test the topside resistance on the weekly. So take the highs, draw a simple line. You can see that for now the market has come back and seems to be showing potential for confirming resistance on this blue line. So as long as that's the case, we can start expecting a pullback as far as the Dow Transports are concerned, unless the Dow Transports do get enough momentum to move above this declining RSI resistance line. So that's a layer of resistance, and there's another way to look at this, which is to figure out where the pullback began in 2015. And we can see here that this break in the RSI, this trend line break here in May, brought the market off the highs here. We've never been back to that level since then. And so we draw a line from here, and right now you can see that the market has come back to test this level here. So the red line has been a problem recently. You can see here resistance for those highs, resistance on the red line for the highs here, and now we are back to test that level. So week to week, if the market confirms resistance on these two lines on the Dow Transports weekly, one can expect a pullback. If you take a look at the hourly chart for the S&P 500, in conclusion, you can see here that we made a slight higher high in prices on the hourly RSI. So hourly RSI here, and we had declining RSI technicals. That negative divergence could be the reason why the market pulled back on Thursday. So that negative divergence, but I think that was all the market was going to offer. And the reason why I think that was all the market was going to give in terms of a pullback, so I'm talking about this pullback here on Thursday, is because you can see that the market has come back and is bouncing here at the RSI 50 level here. So the bounce, so let me take that off. You can see that we've been bouncing on RSI 50 on the hourly RSI here for the market coming back and showing support and moving higher. And over the last couple of trading hours, the market has come there. We made a short-term high as of late Thursday. So the market looks okay. In fact, if you take a look at the hourly MACD, you also see here uniform activity movement below zero and back above it. So for this support here, which is good support on the hourly, and also bouncing at the zero line here and moving higher for the MACDs on the hourly, suggests that hour to hour the market also continues to be strong. So yes, we might get a pullback, especially if the market confirms resistance on this line. So this negative divergence line, so let me draw that again. So this resistance line here could be a problem if the market hits that and pulls back hour to hour. But what one can conclude if you combine the weeklies, the monthlies, and all this confusing setup is the market could pull back day to day, maybe even week to week. But until the SPX breaks below the previous breakout level on the monthly, which is, I believe, is the key. So the key is the market holding above the previous 2015 all-time monthly closing high. So as long as the SPX is trading above 2107.39, this market remains bullish. So that's the key. Anything about this number, even with pullbacks, the market should be healthy. And that's just pretty much all she wrote. Eric Muathe with Muathe.com. As always, good luck, peace, and blessings. ESCS. Woo! Yeah.